If you've got a side gig, an investment property, or a few crypto trades sitting in your tax history, listen up. Right now, before your refund is even paid, the ATO systems are already checking your return against data they hold on you. Not a person, a machine. And in 2026, that machine is the most powerful it's ever been. This isn't a future threat. It's already running. Here's the scope. The ATO automatically cross-checks over 1.6 billion third-party data records a year. ATO data matching program, meaning even a missing $200 of bank interest can trigger an automated "please explain" before your refund lands. Millions of Australians lodge returns the ATO already disputes. So today we'll do 3 moves. Match your pre-filled income, benchmark your deductions, and audit your rental records. And here's the number behind it. The ATO has committed about $1.1 billion to data matching and analytics for the 2026 financial year, specifically to detect unexplained wealth, omitted interest, and other mismatches in individual and small business returns. ATO 2026 investment. But here's the part nobody tells you. That money isn't aimed at the big end of town, it's aimed at ordinary returns, like yours. 3 moves. Match your pre-filled income. Benchmark your deductions, audit your rental records. Each takes under 30 minutes, and they're all free. Move 1 is about what you earn versus what you report. The first thing the ATO systems check in 2026 is whether every income data feed they hold matches your return. Salary comes through single-touch payroll from your employer. Bank interest and dividends come straight from your bank. Rental income comes from property managers and bond authorities. Gig income comes from rideshare, delivery and marketplace platforms, and crypto comes from Australian exchanges and brokers. Income that hasn't been properly reported is flagged by the ATO as one of its biggest concerns for 2026. ATO PABS Accounting 2026. Now the impact. Practitioners report that an omitted $2,000 of bank interest can trigger an automated discrepancy notice within weeks of lodgement. Brown Hamilton 2026. If that $2,000 should have been taxed at 4.5% including the Medicare levy, the underpaid tax is $690, and then the ATO adds an administrative penalty. For failure to take reasonable care, that's 25% of the shortfall, around $172, ATO penalty framework. So a forgotten term deposit can morph into roughly $860 or more, before interest. Once your income is matched, the next thing the ATO targets in 2026 is your deductions, AU1, and whether they're reasonable for someone like you. The big focus areas are work-related expenses, car and travel claims, working from home claims, and rental property deductions, ATO, Yahoo Finance, AU 2026. The ATO says it's less focused on the amount you claim and more on whether the claim is reasonable for your income, your industry, and your past behavior. Rounded estimated claims without documentation are frequent triggers. Wollongong Tax Services 2026. Here's what that costs. Picture an employee claiming $5,000 in car expenses with no logbook and $2,000 in home office on the wrong method. If the ATO disallows both, that's $7,000 of extra taxable income. About $2,415 in extra tax at 34.5% plus a 25% penalty of around $604, totaling roughly $3,000 plus interest. Wollongong Tax Services 2026. And claims over $5,000 in travel with no diary are described as immediate triggers in 2026. Brown Hamilton 2026. The myth: a few $100s won't trigger anything. People believe micro amounts of interest, gig income, or crypto slip under the radar. The fact: the ATO cross-checks 1.6 billion records a year, and small mismatches are flagged by a machine, not a person. ATO data matching program. So match your pre-fill before you lodge. Put the two together. A forgotten $2,000 term deposit costs around $860 in tax and penalties. Brown Hamilton 2026. And $7,000 of disallowed car and home office claims costs around $3,000. Wollongong Tax Services 2026. Income mismatches and overclaimed deductions stack, and in a single year they add up fast. Meet Sarah. She's 39, a marketing manager in Sydney earning $115,000 on a single PAYG salary, with $145,000 in super and about 28 years until retirement. She's got one investment property on an interest-only loan, a freelance social media side gig through online platforms, and some crypto from the last bull run. She thinks her return is fine. Here's what Sarah found. Discovery 1. $6,000. Sarah earned $12,000 from online platforms in 2025 to 2026 but only reported half, assuming micro gigs wouldn't count. The problem? The ATO's 2026 compliance focus specifically lists undeclared platform and gig income as a top priority, and her platform reports 100% of her income straight to the ATO. ATO Latitude Accountants 2026. Extra tax at Tori 34.5% is $2,070 plus a 25% penalty of about $518, around $2,600 plus interest. Discovery 2. $2,400 a year. Sarah's investment loan charges $24,000 in interest, but she's used $20,000 of redraw for a new car, and her accountant's template still treats all the interest as deductible. The ATO is increasingly matching rental income and deduction patterns, and incorrect interest claims are a common target. Brown Hamilton 2026. If 10% of her interest is really private, that's $888 of extra tax a year, over $5,500 of exposure across 5 years before penalties. Discovery 3, the one that surprised her most. Sarah claims $2,000 in home office using her own formula and $4,000 in car expenses from a rough percentage with no current logbook. The ATO flags claims that are inconsistent with income or prior years and that use rounded estimates without records. Yahoo Finance AU 2026. Scaled back to the proper methods, about $4,000 gets disallowed. $1,780 in extra tax plus a $345 penalty, or from $1,700. Stack it all up across 5 years and Sarah's patents could cost her around $25,000 in extra tax and penalties before any interest. Authors modeling on the scenarios above. That's roughly 5 months of her after-tax salary, all for what felt like just a little here and there. So could this be you? 3 signs. 1. You've earned gig, marketplace, or crypto income on the side. 2. You don't have a current logbook or receipts for your claims. 3. You haven't checked your pre-fill report against your own records. If any of these sound familiar, do the 3 moves before you lodge. So where does all of this leave you? You don't need to overhaul your whole financial life. You just need a few specific practical steps you can start today. 3 moves. Let's do them, each one free, each one official, each under 30 minutes. Move 1. Match your pre-filled income before you lodge. Log into MyGov, open ATO online, and pull your pre-fill report. It shows your salary, your bank interest, dividends, private health, and some government payments. Your job is simple. Make sure every figure you declare is at least as high as what the ATO already holds. This is general information, not personal advice. How to do it. 1. Sign into MyGov and link the ATO service if you haven't. 2. Open your 2025-26 return and download the pre-fill report. 3. Check each income line against your own records. What good looks like. No missing items, and your declared income equal to or higher than the pre-filled data. Move 2. Benchmark your deductions. Cross-check your work-related and car claims against the ATO's standard methods. Use the fixed rate calculator for home office and the cents per kilometer or logbook method for your car, using your actual hours, kilometers, and bills, not a rounded guess. If you can't evidence it, don't claim it. How to do it. 1. Review your prior year claims to spot any big jumps. 2. Recompute your home office and car claims with your real data. 3. Remove anything you can't back with receipts or a logbook. What good looks like. Every claim fully evidenced and no dramatic year-to-year leaps without a reason. Move 3. Audit your rental and investment records. Check whether any loan redraw was used for private spending, because interest on a private redraw is not deductible. Confirm what's a genuine repair versus a capital improvement, and apportion correctly for any private use of the property. How to do it. 1. Trace every redraw and flag any private use portion. 2. Split your interest so you only claim the rental share. 3. Reclassify any capital improvements out of your repairs claim. What good looks like. Interest properly apportioned and repairs and capital works clearly separated. Why now? Look at the timeline. In 2024, the ATO expanded its data feeds across digital and gig platforms. In 2025, work-related expenses were named the Main Tax Time Focus Area, ATO. And in 2026, the ATO committed about $1.1 billion to AI-driven analytics, matching over 1.6 billion records to target both income and deductions. ATO 2026 investment. By 2026, your return is compared against banks, employers, platforms, and property databases automatically. The net has never been tighter. After you act, verify it worked. You should see your declared income match or exceed the pre-fill report. Confirm that every deduction has a receipt, logbook, or diary behind it. And if a claim has no record at all, remove it before you lodge. Everything here is drawn from the ATO and Registered Tax Practitioner Guidance for 2026. All the links are below in the description. Today you learned how the ATO matches your income and deductions in 2026, and the 3 moves to do before lodging. Next week, which work-from-home method actually saves you money and which one flags an audit. If this saved you please explain from the ATO, do one thing: subscribe. We read the fine print so you don't have to.